do we start to see conditions stabilize? That was the word we were using yesterday. Are they stabilizing? If you go back and you look at our posture around situations like this, we have two references that we can look at. We can go back and look around April of this year. We can go back to August, September, October of last year. We can see what happens. We don't just like all of a sudden our posture is just negative. That's not how it works. That's not how it functions. It's the fact that it's dropping in score, two weeks in a row, 3 weeks in a row. That's the first thing, or larger numbers of drops that'll trigger us to be mindful. It's not like, oh, that means I should run out and buy puts. No, that's not what it meant. And even though the market's dropping hard today, what I said was, this wasn't a market. Of course, looking backwards, I would have loved to have put some puts on. Of course I would have, right? But it's very difficult to, as I said before, look both left and right at the same time. I can look left and I can peripherally look right and mostly stay focused on the left and train myself to do good with that. I'll never be able to focus both left and right at the same time. It's the same thing with, I can't focus. I can be balanced where I only have a little bit one way or the other. That will probably end up doing now. Right now as we're like, hey, is this thing trying to come back or is it trying to go lower? We may find ourselves on both sides. But when we're bullish, and that's what we were, right? So the best thing we can do is say, okay, now that the real nasty part's hitting, how well did I protect myself? How well did I see this coming and say, hey, if I'm going to trade lighter, my risk should be under control. We should be in our turtles. That's all we've been talking about, right? Is this market could still turn into a correction, we said. We said this, as we look at it, I'm just going to pop in. That was our posture drop. It went from 0.75 and then we went 1.25 and now it's 1.5 and we're like, whoa, that's accelerating to the downside, not decelerating. Yeah. So I would say coming into this morning, this is not now. Did we say, did we expect Japan to unexpectedly raise rates? Yeah, no, there's global disorder. Yeah. Let's go through the intro. Let's get to it. Hey, everybody. Good morning. Happy Monday. Welcome to the Market Watch Group Weekly Opening Bell. My name is Scott. I will be your host. As always, please keep in mind, we are not brokers nor advisors. We don't give advice or recommendation. This is for educational and illustrative purposes only. And good morning, Billy Ray. Good to see you. Opening futures and news. Oh, we'll start there. I popped in. There was some chat. There was some good chat going on this morning. I said, hey, take a look at the VIX. All of a sudden, that VIX just went. We saw things developing. We've been talking about the VIX and its representation of escalating fear in the market. We've been talking about that. We've been talking about how important it is to be mindful of it. And it bore out. Okay. Calendar's pretty light this week. It's not about the calendar right now. It's the market got into a bit of a tailspin. So we'll see how this plays out. If you remember what we said yesterday about looking for new trades or open trades, for the most part, I would expect you're mostly in cash. And if you weren't, you are now or will be. I mean, we've been talking about having pretty much not much on and talking about waiting for the dust to settle. Well, it hasn't settled yet. In fact, it just got dustier. So If you remember if you were here, what I talked about was an analogy of a foxhole, and we said, all right, sometimes we may dig lightly because we expect to be out, and we don't want to put a lot of effort in. And sometimes we better just get those defenses strong because we're going to be here for a little bit. And yesterday and over this last little bit, we've said it feels like we may be digging in for more. And here we are, right? Oh, I love it. Michael says, buy the dip. Ultimately, it's here. We are, yeah. Ultimately, we do want just one little piece past this, right? We're gonna have that mentality again. And, you know, we don't want to fall into doom and gloom. So there you go. It's about what dip are we talking about? Right now, we've reclassified our dips. So I love it. I know you were joking, by the way, of course. We'll talk about the opening range. It's going to be an interesting one because it's going to open up in a nasty kind of way. In fact, I'm going to maybe put on my we'll see what happens here. Early week opportunity list. Don't expect much. Trading plan section of the week. What did we say? We're on goals. We're working on goals. Even if you haven't gone through an entire round of your trading plan, this is always one. But my insistence is that your goals are process oriented, not outcome oriented. So when you're setting goals like, I want to improve my trading plan. I want to let my winners run better. Can we quantify that? Yeah, right? Every goal should be measurable. Can we measure it? Can we quantify it? So we're thinking about goals. But if you're just like, I want to make more money, we all do. That's why we're here. We all want that. Let's be specific. Okay, let's get into it. Let's pull up. There's that VIX. Remember what I said? Remember when I was describing this one and this one looked like, oh, it's never going to get that big because we were back here and we're like, our concern is escalating, can turn into, and I never drew that for you. I didn't say, oh my gosh, I think we may. I mean, this is such an overreaction. I don't know, maybe not. This is like close to pandemic level. 5 years, daily. So you can see that even post-pandemic, the spikes were in the 40s. Like this is when this was spiking up here to 85, we saw the market go limit down a couple of days, which is where it's down 5% and they shut it down temporarily. Like it was like real funky nasty. And we are opening down quite. So yeah, if you held any of your hedges that we've been talking about, those puts that we just buy puts on the SPY, today's the day when even if it was just one or two contracts that you held, it's the volatility pumping in going to have such an enormous impact. I can't even describe it. Now, if you own options and they're going against you, this vol spike today is actually quite helpful to you. Because vol pumps in everywhere. So, but I hope one of the things we've been talking about is how are you exiting? How are you managing? So yeah, this VIX is in a place that's to me, it's representing. Let me see if I can't. Yeah, let's get back over here. I was watching them all from yesterday until they're gonna go limit down this morning on the possibly on the Nasdaq, the Russell. Okay, so the S&P is down 3.5. The Dow's down almost 3. Let's go watch a little bit of this. I'm gonna go down to a 1 day, 1 minute, and let's go to the SPY now that it's open. Oops, SPY. Yeah, that was a nasty drop. 4%. 4%, and now we get to see what happens. Now, just like we did on Friday, we really can't do much with this but watch it for the time being. Does it go lower? Does it come back up? Let me now move this back out. If you remember when we were convincingly breaking the 50, I added the 100 and the 200 to start to give me these other areas of representation. Whew, man, this thing is just down quickly. But the question is, do we end up with a day like this? Do we end up with a day like this? Where it tries to go up, it tries to go down, but stays. Do we end up with a day like this? Where it just gets worse. This is where we're watching today. There's nothing we have right now that can help us to make a decision like this. There's nothing, right? Any of these three things could happen. We're 2 minutes into a day that just gapped down 4%. This guy looks worried, and he should. Wall Street backs AI spending. 2-year yield plunges below, which is interesting because, we've been inverted. We've been inverted for quite some time, actually. So they're now betting sharply on money easing policies. What does that mean? It means that at this point, not only are we starting to think about, let's get the Fed Watch involved here. By the way, how's everyone feeling? Is anything nasty happening in your portfolios, or has everything been? Have you gotten everything under control over the last couple of weeks? Have you eased on your bullishness enough that you really didn't have much? Intermittent voice. The quality of the voice. Let me see if I can't. Thank you for flagging it. Okay. No. How is it now? Let me know if it continues. I tried to do a quick reset. Let's see. It's better. Good. Okay. That easy, guys. If you have an issue, call it out. If it, we'll just try to move through it without missing a beat. We are now at 92% expectations that the rate cut is going to be 0.5%. How interesting is that? Okay, so this is where we are right now. Current, we're at 52555. This is where we have a 92% probability in September, which means what? Which means it looks like we're skipping right past 500 to 525, straight to 475. In fact, the slight bet here is for 0.75. That's what we're looking for if it gets to there, 0.75. Now, if you look here, this is for a half of a point cut. Half of a point. So when we're looking at right now, we've had an inverted yield curve, which a lot of people have said that's another one of those like the SOM indicator. When the yield curve first went inverted, they talked about a recession. Then the thing is we did have a recession in 2022, early 2022. The yield curve didn't invert until later on. So like everyone's dogmatic approach was what hurt them. Look, for a recession, 2 negative economic output quarters in a row, that's a recession. It's recessionary. We had that. It was accompanied by a bear market. We had a bear market in 2022. The market was bearish the whole year. Dropped 30% over the year. That happened. But the yield curve remained inverted until just now. And what's making it drop? A huge shift in sentiment around monetary policy, which means they think they're going to cut rates. Right? So if you've been thinking about buying some bonds, this is a good time to lock them in. This may be as high as it gets for a little while. So if you're adapting your long-term portfolio, you could definitely think about that. But, okay, now what about, we've got 3 months left. For November, it's hard to like track what it's even doing. This right here, oh, that's big. This is down 1% right here. So there's only a 10% chance. That's 0.75. So basically the probabilities are looking like the market wants 0.5% in September and another 0.5% in November. And then in December, one more quarter. So as of right now, the market is pricing in a drop of 1.25%. That the Fed is going to be very accommodative. Very accommodative is what they're looking for. All right, we'll see. I mean, don't fight the Fed, but the Fed hasn't started yet, right? Not yet. There's not much going on right now. The Magnificent Seven are set to shed $1 trillion in wealth, led by Apple and Nvidia plunges. Yeah, Buffett's been apparently getting out of his Apple holdings. I'm pretty sure that's bigger than the entire crypto market. I haven't done like a market cap evaluation of crypto in a few months, and it's hard to track it sometimes. A good amount of values come back, but yeah. What else? Let's go look at the calendar for this week. And then let's go take a look at the carnage in our watch list and see what that looks like. I do want to take a peek at the range. There you go. So What are we seeing, at least initially? Recovery. I mean, it's only, again, we're still 9 minutes in, but could this thing recover? Like, you know, this is one of those times where if you had a stop loss on, my advice would be to take it off. Not get stopped out on the open. You'll get the worst possible price you could get. But wait, because if by the end of the day, this thing, and could it be back up like to here? I absolutely believe that could happen. Yes, 100%. 100% I think that. The market overreacts all the time. But still. Now, here's one of the things I was going to say is our consolidation angle is changing, it seems. So our consolidation angle may now turn into something like this, which is technically easier. I'm still waiting for that, and I'm still going to buy that dip. I'm still going to buy that dip, but now we have to wait for this full, right? The whole market is excommunicado, right? Without penance, there is no trading at this point. We watch. Could we, like, some people are like, is there opportunity here? Well, there's a huge surge in premiums right now. Huge surge in premiums. But the problem is, it's like, could you go sell covered calls? Well, yeah, but your stock just got beat up on. It just took a huge hit. So no, not really. Could I think about something like butterfly spreads for some sideways? I'm just not convinced it's going sideways. So I'm not, cash is a position. That's important to know. Cash is a position. So if you're sitting in cash right now, that's a reasonable place to be. We don't have to. It's a funny thing. My beginning in the market was at Fidelity. That's where I got my licensing. I started in late 90s. Peter Lynch was stepped down. If you know the name, Peter Lynch managed the Magellan Fund during its most successful years, and he had stepped down and joined the board of directors. But I did have a chance to hear him speak at a company event. It's interesting. He's kind of funny guy. He said, "Yeah, one of the biggest problems with people when they get into the market and get into investing and trading is when they look at their watch and say, 'Oh my God, it's 10 o'clock and I haven't traded yet.'" Yeah, we don't trade because we're traders. Because we trade because the market has shown us something to trade. Sometimes we just sit and watch. Right? If I'm at a poker table and I see two pros, two sharks getting into like a personal vendetta with each other, and they both have big stacks, I'm not going to play anything. I'm just going to sit and watch until one of them is destroyed or something, right? Like there's just times when you just sit back and just, okay, we're protected. Risk is under control. We can work on our trading plans during this time. We can get a lot of work done. We can be reflective on what happened leading up to this point and how well we processed it. Was there anything we would want to do differently? There's plenty for us to do. It doesn't have to be trading, right? Okay. All right, let's keep talking about it. Let's go look at the watch list and see what the damage is. We're going to start getting rid of some things from the watch list. I mean, look how fast Apple's already recovered. And they had earnings 2 days ago, but they gapped down, already recovered a good amount. Still down 5%. So it's going to be some time before our dust settles in here. Amazon. None of these were trades that we were looking for. We were like, oh, let's wait for the consolidations. All of these consolidation lines are now going to be like, if all of a sudden this thing pops up and then comes back, am I thinking about it? Even though it's under moving averages and other things? Yes, absolutely. Absolutely, yes. Then I'm definitely thinking about it. In the meantime, Yeah, let's watch. All of it is nasty. It's across the board. Boom, boom, boom. There's nothing we can do but prepare. Bank of America is all the way now below the 50 now, right? Back here, we were thinking, hey, this looks fantastic. All of this looks fantastic. And then all of a sudden, we talked about some things in there, took the trade, got out. In and out. Well, next day, fine. And that's why, right? And that's why. False breakout in industrials. You can see in the industrials here, we got what we wanted, and then just sort of right back down. This is not a very common pattern through here. It's interesting. Here's Citigroup, big drop. Here's Caterpillar. It's across the board. This is broad-based. That's why there's nothing we can do but get ready. Oh, look at Colgate Palmolive. Okay. Looking pretty strong there. And yesterday I said I would still think about this one. Not anymore. It's back in its consolidation. So it's like this never happened. That's why I like that method of confirmation. I'm not like, oh, should I or shouldn't I? There's never a question for me. I know exactly what I'm looking for to determine that downward price action is done. As we had, where's my Michael say buy the dip, and then I don't think the dip is done. What we're defining here is when is the dip done? Held position and closed. Then I saw it was working, not filled. And then trade was canceled. What is going on? That's a conversation that you're definitely going to want to have with your broker. Anytime you have an order canceled that you didn't cancel, call them up, explain the situation, ask for an explanation involving potentially time and sales as to why the order didn't fill. Costco. Hey, Costco's holding up fine. Well, where is Costco? Defensive. Like Colgate Palmolive. I still want this, but it seems easier. CSX. You can see all the way back now. Carvana. Ooh, I don't know, you guys. Carvana? Does Carvana stabilize? The Dow's dropped 2.5. Fastenal. It's not terrible comparatively, right? Bitcoin. Oh, I think I had a prediction for Bitcoin. What was it? Yeah, it's down here somewhere, 35. If it breaks, that's not looking great. Bitcoin down 17% today. Goodness gracious. Gold is back down. I think gold is still viable. Yeah. Gold has some viability here. General Motors beat up. Google. There's going to be some great look. So here's the thing. A lot of people will be like, "Oh, the PE ratio of the S&P it's so high." That's all going to get back in line. There's going to be a lot of opportunity, and a lot of times the opportunity is the biggest on the first two bounces coming back. So what we cannot do is let this scare us to where we're not ready when that happens. I'll show you here after we go through the watch list. Home Depot's holding up. Ooh, the small caps gave it all back. All of it. JP Morgan. So far, we've seen Colgate, Palmolive, and Costco, and everything else is just like getting battered. Coke. Oh, look at Coke. All the defensives, mind you. Consumer defensive, the staples right now. Which means I think we'll probably also see some level of stability when we look at utilities today. Yeah? Meta. Ooh. I'm still, Meta's interesting because that's my line of consolidation right there, right? Like, I mean, if I connect this, I feel like, I mean, if you go body to body, we're there. That's tough. Probably not. I mean, with everything else, I'd say I'm just going to watch. But it is interesting to see if this will hold above the 200. 3M. 3M has pulled back, but still looking like it wants to be bullish. Morgan is down. Microsoft is down. Microsoft broke the 200. I have something to say, but I'm not going to do it until I get to the SPY. Micron down. Netflix down. Nvidia down. Everything is down. SPY. We're coming back though. We're now 20 minutes in. And what have we done? We've bounced so far. In 20 minutes, we've gotten back almost 1.25% in 20 minutes. Now, is that going to hold? We still don't know. It's still a long day. As I said, could I see this thing getting all the way back up where we're only down 1% at the end of the day? Only down 1.5% by the end of the day? Of course I could see that. Yes. Yes. Yeah, hold on for the ride now, right? So, yeah, I had something I was going to say. And then by the time I got from Micron to SPY, about the SPY, I completely forgot what it was. We'll see if it comes back to me. Let's go look at what the VIX looks like here as well before we move on. So I've asked a couple times. It seems like everyone's holding up okay. But let me know. Yeah, look at that. Already. I knew that was an over. I mean, there was no way 65 was warranted. That was just such a vast overreaction. Yeah, huge overreaction. Look at the size. That may be the biggest shadow ever on the VIX actually today. Especially if we give back, if we end up getting another 1%, honestly, we could see this end up like this. And then it would have this enormous shadow, which would basically be like a representation of absolute overreaction right there, right? Like just insane. When we were back contextually back here, you don't have, look at that. You don't have those shadows. You had this one to the downside, which I can't remember what that was. You didn't have an enormous shadow like that. Right? Yeah, I guess you had a decent one here. This was from 45 to 37. This was 6 points. We have a 20-point shadow as of right now. I was going to mention something about Microsoft when we looked at SPY again. Yeah, I'm scattered today. I don't know. There was a certain point I had in mind, and I just completely forgot what it was. But the VIX is the most important thing. What an enormous look at that. You can even see it right now. Look at this shadow. When we looked at it, and I'm like 65, that doesn't make sense. It doesn't make sense for it to be above any of these, and you can see where we are now is back down where these were a little bit more, and we'll be back down here at 35. So maybe it was about the sectors. I think that's maybe what I was going to get to. Let's go look at everything else. It'll come to me. There's just so much. I mean, gosh, we're down 24 already. Such an overreaction. TJX doesn't look terrible. Just a mild consolidation. TSM, we're going to have to clean up our watch list over the next week or two, so that'll be interesting. We should get plenty of search time, plenty of time to discuss. Our working sessions are going to be filled. Tuesdays and Thursday nights. Don't miss it. If you miss it, come watch the videos. Here's TSM. Here's the dollar continuing its drop. We love to see that. That's helpful on the longer term as we shake off whatever is going on right now. I think, honestly, such an enormous overreaction. Our market posture is still likely going to drop just even as a result of today. I don't know. It'll be an interesting week to have such a violent first 25 minutes. It's going to make for an interesting week. So hopefully this is where historically I see people kind of, like I said the other day, they go ostrich and they put their head in the sand. This is the exact time. This is the best time to learn. If you're new, there's nothing better than what's going on right now. There's just nothing better than that. Some people think it's easier to learn when it's good and you can make money. No, the worst thing to do is make money when you first start trading because you never learn the right things. I know it sounds counterintuitive, but it's like this is what teaches you. Like it's like people who learned money management in the Great Depression managed their money better than everybody else for the next 70 years. Why? Because they learned the lesson. So if you learn to trade when things are choppy and hard, you develop a healthy respect of what this market can throw at you. Okay, let's finish this up. Be thinking about your goals. Walmart, I think Walmart looks fantastic still. Again, where is Walmart? Consumer defensive. Costco, Walmart, Colgate Palmolive. How about materials? Materials, not really. Communication services, no. Energy, no. Financials, no. Industrials, what are we looking for here? We're looking for money. And if it's not going anywhere yet, that means it's still in cash, and that's okay, right? XLP, Staples, there's something for us there. Utilities, we'll be keeping an eye on this. Healthcare, maybe. Okay, so what are we going to do? Not much. Sit on our hands, watch, learn, work, sharpen the saw. We have plenty of things we can work on. It's just not going to do any trading necessarily. If you trade, a high VIX is when you're more likely to trade intraday, where I'm more likely to pop down and say, hey, let's get into a 5-minute and say, when this thing bounces, I'm going to, maybe you'll do some day trading just to get in and out following the same kinds of principles. But that's only if you're more seasoned. If you're a beginner, paper trade right now. Just practice. It's a great time to practice. You don't have to avoid this market because with a paper account, you can always reset, right? You can always reset and be like, oh, okay, I learned some things. Anyway, all right. Well, look at that. I finished on time today. Miracle. Tonight, This is an important one. Let's get a record attendance. I want at least 10 people coming tonight to the cocktail hour. We're just gonna chat, and this is a good time to talk about what's going on, how it's impacting us. What do we do with this? How do we get through it? Let's just have a chat. Love it, love it, love it. If not, Tuesdays and Thursdays for the next 2 weeks are going to be critical because we're going to be processing this. We're going to be talking about how do we account for the things we're learning in our trading plan and our rules. How do we be reflective of what happened and how we can improve? This is ideal for us, right? Conditions aren't great for trading, perfect for learning. So let's do that. It's good to see everyone. Have a great rest of your day. Let's keep the conversation going in Discord on chat. And as always, happy trading.